What's up, weirdos? What's going on, guys? All right, so how the heck are you guys? Nice little start to the day. Things are looking good. Things are looking healthy. Market looks strong. And that's the stream. See you later. Just kidding, man. Just kidding. Just kidding. It's a good day to have a good day, guys. How the hell are you? What's going on? All right, so Bitcoin climbed into our golden pocket here. We made it all the way up to $116,343 before coming back down. We wicked as low as $114,747. Currently, $115,803, guys. Can we get up here and close inside of our golden pocket on the daily close? We've got about 5.5 hours until that comes. So we'll see what happens, guys. We will see what happens. We'll be here for all of it. I will be, guys, just so you know, I will be live tonight at 8 p.m. Central here on YouTube as well. So make sure you guys come back for that. I will be here tonight. The only night we don't do it on YouTube is Thursdays, because we have the Patreon-only live stream with Max and Rule Black over on the Patreon. So, Jeff, thank you so much, man. Double super stickers, my guy. Thank you so much. I appreciate you, man. I appreciate you. Candyman, do you ever wake up, kiss the person sleeping beside you, and feel happy that you're alive? I just did, and apparently I will not be allowed to this airline again. That's funny, because I'm flying a lot over the next 12 months, and yeah, make sure I don't get a plane beside Candyman, or a seat beside Candyman. What a guy. What a guy. All right, let's get this started, guys. What do we got? 115 people watching. Wow, only 115. And we got 38 likes. Let's get the likes up, guys. Let's get that up. Let's push out the algo, see if we can get some more people in here. Let's get to 100 likes. Let's get to 100 likes. It's a good day to have 100 likes. What do you say, guys? H. Barbarina in the house. What's going on? William, my guy, my dude. Good to see you, man. Strawberry Dragon says, happy Friday. Open mic tonight. Yes, it is open mic night on the Patreon, guys. Community events every weekend. You're going to want to be there for it. Lord of the Realm, what's going on, buddy? Good to see you. Paul, today I have my one-on-one. So you think, what time will you send me the link? I'll shoot you a DM and let you know what time. I don't have the times worked out yet, because as soon as this live stream is done, I will be doing the group coaching call over on the Patreon. So if you are here, if you are scheduled for the coaching call this afternoon, it is taking place as soon as this live stream is over. So you better be ready. Jesus over everything. Absolutely. Let's go. Love the name, man. Love the name. Bulldog Lifts. Let's go. Spirix. This cycle or next? How about both? Spirix is going to do okay this cycle. I think it'll do better in the next cycle, but it will do good this cycle. Guys, make sure you're hitting the like and subscribe. We got 130 people here. We got 51 likes. We're getting there. We're halfway there, guys. 49 more. I got a cough to get out here. This cough just won't go away, man. Stubborn. Quentin, what's up, buddy? Good to see you, my dude. Ethan, I don't normally hit the like, but when I do, it's because someone said super fantastic. Jackie, I just want our bags to stay green every day. Amen to that. Joy, happy Friday, everyone. Hit the like button. DH, yo, what's going on? Carlos, Rob, how long until takeoff? Well, that's the current speculation, right? I mean, there's a lot of controversy over whether we're going to see a sell the news event at the rate cut, or we're just going to take off. And that is why, in my opinion, if you sell and take profits at the FOMC meeting, because you're expecting a sell the news event, there is a good possibility you could get left behind. You could be exiting, and then you're going to be buying back in at higher prices, right? For me personally, I'm not risking it, because we're getting so close to liftoff that, for me, if we did have a minor correction after the rate cut, I would be fine with that, because I know it'll be short-lived, like a week, maybe, right? So I would be fine with that. I would prefer that over selling, taking profits in positions I've been holding for 3 years only to be left behind when things take off. I'm not risking that personally, right? So, Petty Packer, hey Rob, can you take a look at TRWA? Didn't I just look at that for one of you guys like the day before yesterday? TRWA. It sounds familiar. I'm pretty sure I just looked at that. Yeah, just under $100 million market cap, 10 billion max supply. Yeah, I said this looked like a good project. Decentralized finance. Yeah, I said this is a good play. Really good play. All it needs is a couple more listings, right? You need like KuCoin and BitTrue and stuff like that. Maybe a crypto.com and a Coinbase. But yeah, this is a good project. You could get into it early. It only has a $98 million market cap. It's a good play, man. It's a good play. Jared, super happy to be on that swing tier. Absolutely, man. We've been crushing it, brother. We've been crushing it. And just so you guys know, if you are a Patreon member, I am dropping not one, but 2 microcap gems over on the Patreon today. So you're not going to want to miss that, guys. Yes, you heard it right. I'm dropping 2 gems over there today. Gamma, there she is. Hope everyone's doing well. Let's get this money. Easy. Yo, yo, yo. Happy Friday, peeps. Have a blessed weekend, everyone. Dave, what's going on? What's up, Mike? Good to see you, homie. Good to see you too, brother. Good to see you too. Canada, what's your gaming channel name? I'll put it on the screen for you for a minute here. It's Warcraft questing, but most of the time people can't seem to find it for some reason because it's a new channel, so some people have trouble finding it. So I'll put it on the screen for un momento. So this is my gaming channel here. This is where I will be live here actually streaming while I play later today, by the way, too, guys. So if you want to join me tonight, I will be playing on my gaming channel streaming this evening. And this is my gaming channel, Warcraft Questing. Bitcoin's moving. Yes, it is looking good. 115,800. Emilios, great find. DCA opportunity after rate cut announcement. Great final DCA. Yes, exactly. Any updates on Myria? I just shared something over on X today about Myria. Just more updates about their AI integration into their development or their developer tools. So yes, I could not be more bullish on Myria. Kale Dog is uphold using ZBEC for payroll. I believe so. I believe that was the plan. They had announced that like 2 months ago that they were going to be utilizing ZBEC for their payroll system. I'm almost positive that they did. Yes. Royal Family has ties to TR. Nice. Good project, man. It looks like a good play. The Bug. Yes, the Bug. Ugh. You're messing with me, Dave. Carlos, your gaming channel is hard to find. Can you put it in the description? You know what? Here, I'll put the link to my gaming channel in the chat. How's that? Okay. There. If you want the link to my gaming channel, it is in the chat. You can follow me there. Subscribe over there. I'm there generally every day. I'm over there. So, Benjamin, hey buddy, just joined in. You may have covered. I just want to grab more ZBEC at 20375. You think it will? Honestly, man, possibly. I think if you're going to see a retracement on it, it's probably going to be around the FOMC meeting. So that's what I would be waiting for. ETH is breaking out too, guys, by the way. Check this out. Look at Ethereum right now. ETH broke right through resistance like a hot knife through butter at 45.60. We're sitting at 46.25 and climbing. Ethereum is taking no prisoners right now, man. Also, Epic Chain looks like it could be interesting. RWA play by Ripple. Nice. Bowden, what's up, man? Yes, I am, brother. I was going to ask the same. Just found it. Put it in the YouTube, then filtered channel. There you go. Yeah, I put the link to my gaming channel in the chat if you want to follow me there. Paul, thank you so much, my friend. I appreciate you, brother. I appreciate you. Always appreciate the support for the channel, guys. It always means everything. Look at this, guys. What a great day we're having here. Ethereum's breaking out. The altcoins are green AF. Not just on the daily, but on the weekly. We're talking double digits green area for most altcoins, and it's not going to stop, guys. Altcoin season, we are so close to altcoin season. Things are about to get very, very juicy, in my opinion. Let's go look at some of the metrics here. Let's look at some charts, man. Oh, look at that. Look at that. We were just talking about Bitmine stock the other day, and I put in the symmetrical triangle, and I said we were going to break to the upside. Look at this. We've broken out to the upside of this symmetrical triangle, and this was our profit taking areas right here around 62.35 and 135.48. Very, very nice call on that one. We're about halfway to our goal for profit taking on Bitmine stock. Guys, if you're not in our trading group, I don't know what you're doing with your life, honestly. Crypto J505, what's up, man? Ray, what's going on? Let's get it. Hit those like buttons. Absolutely, man. Can I get an amen to that? Okay, let's look at some of our metrics here. Let's go Bitcoin dominance. What do we have? Oh, shit. Bitcoin dominance falling below support. We are 0.02 below support right now. Not much, like a little hair below, right? But we are below. Are we about to completely collapse on the Bitcoin dominance, guys? It looks like it's very possible we will. So let's have a look at these metrics. Altcoins are green. Ethereum's breaking out. Bitcoin dominance right now is officially and technically below support. Let's go look at the total 2. Total 2 has broken above resistance and climbing. Look at that beautiful break out of the symmetrical, the bull pennant, to the upside. Very, very nice technical breakout. Let's look at the total 3. Now, I've been telling you guys with all these metrics that we were coming. Look at that. We broke above resistance on the total 3, and it is climbing like crazy as well. So I would say the only level of resistance that we have on the total 3 right now, guys, is right there, right? And we're just below it right now. And that is because that was the high in December when we had that altcoin pump in December and January of last year, right? So we've broken above here, let me just zoom out a little bit. We've broken above the previous cycle all-time high right here, right? We've broken above it finally. So now we just have this final resistance where we topped out back in December and January when we had that altcoin rally. If we can break above that, guys, we're going. I told you guys this was coming, right? Let's go look at the Russell. What's the Russell doing? Oh, still holding close to the breakout here. Russell just has to break above this blue line, which is the previous cycle high there as well, guys. We are so close to everything taking off. Look at that. Look at how close we are. Oh, man. If you're not excited now, you better check your pulse, guys. You better check your pulse. This is going to be fun. This is going to be fun. All right, let's get into some of the stuff that we got today. We've got this little clip here. Little bit from Ondo Finance. First, it was the dollar, then treasuries, now stocks and ETFs. Kale Dog, thank you, Rob, for all of your work. Hey, absolutely. Thank you. Mary, we here. Let's go. Hit the like button for Rob, please. Yes, guys, hit the like button. We got 180 people here. We got 81 likes. Let's get to 100 likes. We need 19 more, guys. You can do it. Put your back into it. All right, let's get to this little clip here. Ondo Finance launches Ondo Global Markets. Let's go.
Are tokenized stocks and ETFs the next frontier?
We would like to believe it is. Typically, it's very hard to predict which assets actually get adoption. But when you think about the latent demand globally that is out there for these assets, I think it is pretty significant and a lot of people underestimate it. Right now, when you look at stable coins, we're already coming up on almost $300 billion, in large part because hundreds of millions of people globally have figured out that the stable coin is a very easy way to get access to the US dollar. And by putting it on blockchain rails, it actually becomes better than if it's just in a bank account because you can freely send it around 24/7. The same thing has started to happen with tokenized treasuries. It went from $1 billion or so 18 months ago to now $7 billion. And we expect the same thing to start to occur for stocks and ETFs. There are about 400 million people outside the US that have a crypto exchange account, but most likely do not have a brokerage account because access to brokerage accounts historically has been a lot more difficult to get. So we believe you'll start to see crypto exchanges and crypto wallets start to list stocks in tokenized form, really opening up access to that global audience that historically has not had that.
I am so bullish on Ondo, guys. You have no idea. All right, let's get into some of the news. Amazing coins. Hey, Rob and crypto weirdos, got you going in the background, making my famous salsa. Remember to hit the like, guys. Yes, absolutely, guys. Hit the like, hit the subscribe. Let's get to 100. We got this, guys. We got this. What do we have now? 179 people watching, 85 likes. Oh, we're getting so close. 15 more, guys. Bitcoin ETFs surge past expectations with remarkable inflows. Spot Bitcoin ETFs listed in the U.S. witnessed net inflows of $552.78 million on Thursday. This positive trend sustained over the past 4 days, brought the total inflows to $1.7 billion. Investors' appetite for these investments vehicles indicate a significant interest in Bitcoin as a sound financial asset. According to data providers Value, BlackRock's iShares Bitcoin Trust attracted the largest share of inflows with $366.2 million. Fidelity's FBTC fund followed with $134.7 million, while Bitwise BITB product drew $40.43 million. Other significant fund providers like VanEck, Invesco, and Franklin Templeton also reported net inflows. The activity in Bitcoin ETFs gains attention in light of the 751 million outflows recorded in August. That month was marked as the third worst for ETFs since their initial outflows started in January. Meanwhile, the same period saw spot Ethereum ETFs achieving their second best performance with an inflow of $3.87 billion, suggesting a capital shift from Bitcoin to Ethereum. Although Ethereum ETFs faced short-term negative flows in early September, they rebounded with renewed inflows on Thursday. Spot Ethereum ETFs recorded a net inflow of $113.12 million, suggesting a continued interest in Ethereum-related investment products. Alongside ETF inflows, the cryptocurrency market experienced a positive price movement. Bitcoin saw a rise of 1.04% over the past 24 hours, reaching $115,455. It's actually $115,807 now. Meanwhile, Ethereum increased by 2.87%, trading at 4,553. It's actually 4,615 now. Consequently, the total market capitalization rose by 1.81%, reflecting improved overall outlooks for digital assets. Investors are now focusing on the upcoming FOMC meeting scheduled for September 16th and 17th, according to CME Group FedWatch tool. There is a 92.5% probability of a 25 basis point rate cut. Additionally, a 7.5% probability is priced in for a larger 50 basis point cut. We're not going to see a 50 basis point cut. I wish, but no. But it does open the door to another 25, possibly a 50 basis point rate cut in October. Chris, my dude, thank you so much, my friend. Thank you so much. Paul, appreciate for everything, Rob. Rob, I'm in higher tiers, so you send a link to the group separately. I send it to you separately, my friend. I send it to you separately for a one-on-one call. So yes. Okay, continuing on, let's segue over to Squawk Box. What's going on today, guys? What's going on today? Former NEC Director Gary Cohn on the state of the economy, Trump's tariffs agenda, and the AI impact. Let's go.
Vice Chair Gary Cohn. He also served in the first Trump administration as a director of the National Economic Council. I always like having you on. You were in the administration. Like so many people, a lot of things that the president does, you're like, wow, that's great. But every once in a while, I'm sure in the first administration, it's like, that's not my favorite thing. Heard a lot of Republicans with tariffs, not my favorite thing. Although many of them conceded that there were some things that we should probably deal with after 40 years of that it wasn't fair. Now the market's are at all highs. We had Liberation Day. Everybody was negative. We heard gloom and doom and inflation and, spiraling prices. We heard all that. The market is telling us the worst case scenario didn't happen. Do you like tariffs now? Or do you admit maybe they're raising revenue? Or do you still think all this is happening for other reasons in spite of the tariffs?
So, Joe, I think you ask a really interesting question. So I think tariffs do serve some important purpose, and you and I've talked about that.
We have.
The one thing that we learned, and we all need to remember, is during COVID, we realized how fragile our supply chain is in the United States. So when we take a look back and say, what can't we allow to happen ever again in this country? We cannot allow ourselves as a nation to be exposed to certain goods where the supply chain gets clogged up or stops and really slows down our economy.
It's been 5 years. Have we made progress on that?
We have made progress on that. So, you can go back into the prior administration, the CHIPS Act. Mm-hmm. We knew that chips were one of the biggest bottlenecks that came out of the COVID crisis. Just about everything that was manufactured in the United States ceased manufacturing because we no longer had access to chips because the supply chain slowed down. It was quite obvious that we needed to manufacture chips here domestically so we could continue to build from toasters to sophisticated weaponry. Yeah. All of them had chips in it. So the piece of the equation where we are forcing and incentivizing is important, key parts of the supply chain components back into the United States, I think everyone agrees is a really important part of what the administration is doing. And we should applaud that because we are a safer and sounder.
All the way to the point of taking a stake in Intel?
Like, I'm not sure I would argue that taking a stake in Intel is the right thing to do.
But we already gave money. We might as well get a stake.
Look, I agree. Once you give them money, the question is, do you want equity or do you want debt?
Yeah.
And by the way,
passive.
And I'll remind you guys, it wasn't the best few months of my life, but in 2008, the banks went through this. When Hank Paulson tarped the banks, the U.S. government put capital, they put debt into each of the banks.
Whether you wanted it or not.
You had, whether you needed it, wanted it or not, whether you'd gone out and raised capital the week before, which the bank I was with had, you got capital injected in your bank, you owed them a very high coupon, and they attached warrants to it. So this idea that the federal government should get a return on capital for something they do to stimulate economic growth is not new.
The only thing that makes it publicly palatable for taxpayer dollars, honestly.
It does. Yeah. Well, what should makes it publicly palatable for taxpayer dollars is the sovereign protection and the security we get by being able to control our supply chain. That we saw how vulnerable we were in COVID.
Well, they just did it with rare earths.
Yeah, we should not have to live through that again. But the flip side is, Joe, when you look at tariffs as a whole, I think what you have to do is take a step back and look at how corporate America is dealing with this tariff equation. And I think this is not as well understood. I think it's a very interesting phenomenon that's going on right now. So if you look at corporations today and they look at their input costs and they're buying goods and the cost of those goods are going up, and they feel like their ability to raise their prices to end consumers is very limited. Yes, they can slowly, incrementally raise prices, but they're being charged tariffs overnight. Companies are being forced to figure out how to deal with that equation or that conundrum. They have actually figured out how to deal with that conundrum, and I think we see it in the data.
That we
month.
didn't. That was not in our calculus for what might happen.
We scratch our head. We scratch our head. So what are we seeing? We're seeing companies, they can't deal with the cost of goods, the input cost. They can't deal with the sales cost. But what companies have figured out in the last decade or so, and this has been going on pre-tariff, but got accelerated by tariff, is companies are figuring out that they can be dramatically more efficient and run with less human capital. So we're seeing companies cut down on the amount of employees that they need to run their business.
We're trying to rebuild the center of the country, and so some of this isn't. It's counterproductive to what we're trying to do as well.
You just have to understand, when you're running a company,
you have to do it,
and your obligation is to your shareholders to create a return on capital, and you have to be able to pay back your debt. If the cost of your inputs goes up and you can't charge more for your finished product, you have to figure out how to become more efficient. So look at the data for Q2. In Q2, revenue as a whole for companies went up just over 6%. I think it was like 6.3% was the growth in revenue for Q2. Earnings, EPS, went up by 11.8%. Now you could say there's some efficiency. As you get bigger, you get more efficient. So the last dollar in is more efficient than the first dollar in. But companies found ways to make themselves more efficient. They sold more product with less cost, and that cost wasn't cost of goods.
Everyone said
the cost was labor.
Everyone said, people around here said that you're going to see it in profit margins, and that's why we're going to get hurt. Well, the market wouldn't be trading at all-time highs.
They were wrong on profit margins.
They were wrong.
But do you see it in the jobs numbers?
You see it in unemployment rates.
You see it in the jobs numbers and the employment rate. And is that the catch-22, that you can't have your cake and eat it too and have everything?
Yeah. Look, when you squeeze the tube one place, it's got to come out somewhere else. And I think what we're seeing, and we're all sort of, a lot of people are scratching their heads going, I don't understand this. The economy's good, earnings are good, retail sales are okay, but the job market's weak. Well, the job market's weak because to make the equation work, companies are getting smaller. You know,
and by the way, they can do it with AI right now. They're being handed tools that lets them come
So here's the interesting part, Becky. I think AI is a part of this, but we're still in very early innings with AI.
That's what
when you look at the data and you talk to CEOs today, everyone's using AI, but they'll tell you that the return on investment is still fairly low. Everyone knows that the return on investment in AI is going to grow and grow exponentially, and that's when people will make much larger investments. Right now, people are doing this actually with human capital. They've realized that their companies have just gotten sort of fat and heavy, and they just continue to do it. And it's almost easy in this cycle because we are at a time in the history of this country where every week 80,000 plus people turn 65. So that means you've got people naturally leaving the workforce. So you don't necessarily even have to terminate people or let people go. As you've got more and more people reaching retirement age every day in this country, as you have people retire, if you don't replace them, your headcount is
like letting the Fed's balance sheet run down.
Right, you're naturally shrinking. And I think that's what we're seeing going on here. So, you know, look, instead of raising prices, we just decided to put it.
You weren't able to. You didn't see Charlie Scarfon earlier this week, did you? Or did you see any of that interview?
I didn't see Charlie, but I actually spent a lot of time with Charlie this weekend. He and I were talking about how much overhead he's taken out.
I made him say it twice because he said on our air that a lot of small and medium-sized companies that he deals with, they were okay with the tariffs.
Mm-hmm.
They said there's been 50 years of unfair trade practices. We're okay with trying to adjust some of that stuff, and we're going to deal with it. We're not unhappy if they voted for this administration, and they're going to deal with it. And I hadn't heard that before. I thought it was universally reviled that these tariffs were put, and they also, the levels where we finally settled at aren't as onerous as we thought early on.
If you would have gone on to ask Charlie what he's doing in his own business, I had that discussion with him Sunday,
and
he would tell you that he has significantly downsized the amount of human capital.
Back to what you're talking about.
In his bank. He went out of his way to talk to me on a Sunday. I had a large a large Mexican company tell me the same thing. 2 other American companies tell me the same. It was indirectly, as I was talking to companies over the weekend at the US Open, everyone was telling me sort of, hey, this is what we're doing. We're downsizing, we're downsizing,
It explains the conundrum
of
why you see the jobs market down.
that's not what we want. We're onshoring to try to bring jobs back here. We don't want to lose.
Well, hopefully we will see a rebirth in jobs. We'll see a rebirth in manufacturing. If rates come down, we would hopefully see a restart in housing. Right. The housing sales, housing numbers look horrible right now. New construction looks horrible. But again, the Fed's going to lower Fed fund rates, overnight rates. No one borrows for a house on overnight rates. They borrow on 5-year or 7-year or 30-year money. Yeah. We're going to have to see what happens to the curve. I'm not as optimistic that we get a parallel shift on the curve coming down. Yeah. I think more likely we get some steepening of the curve. It will help, but it's not going to create a housing boom. Right. And when you see all the CapEx that's been foreshadowed to be spent, look, it will get spent. It's just not all getting spent in 2026. It's 26, 27, 28, 29, 30. And a lot of it is more equipment than it is people. When you're building these huge data centers, you're buying a lot of steel, you're buying a lot of cement, you're buying a lot of copper. It's much more heavily invested in things and goods than it is in people. Yep.
AI taking jobs, affecting job markets, guys. Not good, but we're still early. Like I said, we're still early in that phase of, of AI taking people's jobs. It's taking some people's jobs, but not en masse or anything. Ramona says, hit the like and subscribe here and on Crypto Blueprint. Absolutely. Dion, what can you tell us about Jasmy? I can tell you everything about Jasmy, but what I would say, Dion, is actually I'm going to Jasmy Labs in November. Hara has invited me out there, and I am filming a documentary on the entire trip. I'll be out there for a week, and I will be releasing the documentary. Obviously, once it's put together, right? So yeah, it's going to be fantastic. It's going to break down the in-depth look at Jasmy, at Junction, the differences, Jasmy Chain, a look at Hara, KJ, and the team, and a look inside Jasmy Labs, guys, right? This is going to be a great documentary, so make sure you're here subscribed to the channel or you're going to miss it, right? No one has done what we are doing. Another local, thank you, Rob, for the alpha you drop every Thursday with Rule and Max on the Patreon. Hey, absolutely. Phil, thank you so much, man. What's up, Rob? Flare or FET or both or neither? Honestly, if I had to choose for a long-term hold, I'd go with Flare, personally. I would go with Flare. Flare is a great project in the XRP ecosystem. Economists anticipate 25 basis point Fed rate cut amidst market expectations. What's me, Yamalio? What's up, man? Sorry, I can only get you 5 push-ups plus 1 for chesty. Hey, no pecs, no sex. You know what it is, brother. Economists forecast a 25 basis point federal rate cut in September, suggesting further easing driven by dovish economic indicators impacting both traditional and crypto markets. The anticipated rate cut underscores potential liquidity boosts for digital assets like Bitcoin and Ethereum, aligning with historical trends of increased risk appetite and market positioning. Economists anticipate a 25 basis point cut in September. This comes as macro data reflects dovish inflation figures and flexible labor conditions. These signals have created notable anticipation of the market positioning. The Federal Reserve, led by Jerome Powell, hints at a policy shift influenced by inflation and employment metrics, alongside economists like Jim Reed suggests an easing of monetary policy, emphasizing market conditions favorable for rate adjustments. Financial markets are reacting decisively to anticipated Fed actions. CME FedWatch data indicates a strong probability for rate cuts, impacting equity rallies and potentially boosting risk assets like Bitcoin and Ethereum. Historical data suggests that rate cuts led to the spikes in the DeFi, TVL, and staking activities. This coincides with increased crypto market liquidity, while altcoins experience subsequent gains, reflecting overall positive market sentiment. Prominent KOLs such as Arthur Hayes and Raoul Pal linked Fed policy changes to liquidity influx into digital assets. Their statements highlight increased crypto market activity during historical dovish monetary policies. Potential outcomes include enhanced on-chain engagement as developers and institutions respond to favorable rate conditions. Such environments typically buoy staking in layer 1 proof of stake chains. So we're seeing an increase in staking activity, increasing the TVL in ecosystems, which increases the value of said tokens. Swift coin, baby. Absolutely, Carlos. Hangman, what's going on, buddy? Update on Swift price prediction at the peak. My price predictions for Swift have not changed. I could see Swift coin hitting upwards of 30 to 40 cents, to be honest with you. So, yeah. All right. What else do we have? We got yet another article to get into here. Urgent. Coinbase fights to uncover deleted SEC texts. The cryptocurrency world is buzzing with significant legal developments. Major exchange Coinbase has taken a bold step, asking a U.S. federal court to intervene and order the recovery of deleted communications. Specifically, Coinbase is seeking to retrieve deleted Coinbase SEC texts from former SEC Commissioner Gary Gensler. This move underscores the ongoing tension between crypto innovators and regulatory bodies, highlighting the critical need for transparency in government dealings. This legal request isn't just about a few messages. It's about shedding light on how crypto regulations were shaped. According to reports from The Block, the SEC reportedly deleted a full year's worth of text messages from Chairman Gary Gensler. These critical communications span from October 2022 to September of 2023. The agency cited a new policy implemented in 2023 as the reason for the deletion. Yeah, isn't that funny? Isn't that funny? Because who is at the head of the SEC who created this new rule? Gary Gensler. So essentially, Gary Gensler created a rule at the SEC that his texts, based on a time frame, would be deleted after he was gone, covering his tracks for what he had done. Isn't that weird how the person whose texts are deleted is the same person who created the rule allowing the texts to be deleted? What is he hiding, I wonder? Coinbase, the crucial communication the agency cited a new policy implemented in 2023. However, Coinbase views this as a significant obstacle to understanding regulatory decisions. Paul Graywall, Coinbase chief legal officer, has voiced strong concerns. He explained that Coinbase has been actively requesting internal SEC communications regarding crypto regulations for years. Discovering that a substantial portion of this information was reportedly destroyed has naturally raised red flags. The company believes these Coinbase SEC texts could contain vital context for the SEC's approach to the digital asset space. Coinbase is not just making a simple request. They are pursuing a multi-pronged legal strategy to ensure accountability and retrieve the missing data. The exchange is asking the federal court for several key actions. They want more than this information. They want Gary Gensler to face the consequences of his actions while he was the chair. And they know damn well that there are incriminating texts that were deleted, and if they can be recovered, Gary Gensler's probably going to prison. Expedited discovery, sanctions against the SEC, and submission of relevant text messages. The implementation of these deleted Coinbase SEC texts are far-reaching. The crypto industry often criticizes the SEC for perceived lack of clear guidance and regulation by enforcement approach. If internal communications related to policy making are not preserved, it further complicates efforts to understand the basis for these regulatory actions. This legal battle highlights a growing demand for transparency from government agencies overseeing rapidly evolving sectors like cryptocurrency. The dispute over the deleted Coinbase SEC texts could have significant ramifications for the future of crypto regulations. Transparency and clear communication are fundamental for building trust between regulators and regulated entities. When these communications are deleted, it can erode the trust and lead to suspicion about the fairness and impartiality of regulatory processes. This situation also brings to light the challenges of digital record keeping within government agencies. As more official communications shift to digital platforms, robust policies for retention and disclosure become paramount. The SEC's new policy, cited for the deletions, will likely face immense scrutiny in court. The outcome of Coinbase's request could set the precedent for how the government agencies handle digital communications related to emerging technologies. For market participants, this case reinforces the need for vigilance. It also emphasizes the importance of legal challenges in shaping regulatory landscapes. A favorable ruling for Coinbase could force greater transparency from the SEC and potentially lead to clearer, more predictable rules for the crypto industry. The legal tussle initiated by Coinbase to recover deleted Coinbase SEC texts from former chairman Gensler is more than just a procedural request. It represents a critical juncture in the ongoing dialogue between crypto industries and its regulators. The outcome will not only impact Coinbase's specific legal battle, but also influence future standards for transparency and accountability within government agencies dealing with digital assets. As the crypto space matures, the demand for clear, consistent, and transparent regulation will only grow louder. This case serves as a powerful reminder of the industry's commitment to pushing for more open and equitable regulatory environment. So, is Gary Gensler going to get hammered here? I hope so. Couldn't happen to a nicer guy, to be honest with you. Benjamin, what's up, buddy? I see you, my guy. All right, back over to Squawk Box. Former Goldman Sachs partner Abby Joseph. I'm a long-term bull on the United States.
Right now to talk markets and much more is Abby Joseph Cohen. She is the former partner and chief U.S. strategist at Goldman Sachs, now a professor of business at Columbia Business School, and a very longtime friend of Squawk Box. In fact, I almost feel like Joe should be leading this off because the two of you were both there 30 years ago.
We were.
For this, you were a frequent guest from the beginning, Abby.
Yeah, I was 12 years old at the time.
You were,
Joe was about 8.
Yeah. No, I was 61, I think. No, that's horrible. It's good to see you again.
Thank you. I'm delighted
We
to
haven't
be here.
changed. Neither one of us have really changed. I don't think, have we?
I don't know about that, but that's
Who are you talking about? You or me? Yeah, exactly.
Well, Abby, talk a little bit about when you came on, because we were just saying, you know, we have these IFB things we put in our ears to help us hear
October
what's
7th,
happening.
2024. I didn't know it had been that long.
But you had a special IFB that the Squawk team gave to you because you were on so frequently.
Absolutely. You know, when Squawk Box started, I was given an opportunity to help explain markets to your viewers. And I guess the viewers responded positively. And I was on so frequently that I once walked into the studio and I was given the gift box that included my own personalized IFB, which is the earpiece. So I felt like I was part of the team.
You're on the Legends and Icons and Legends with Jack Welch and everybody. Yeah, everybody has signed it. Jack Welch, Martha Stewart, Warren Buffett, Donald J. Trump, who signed it as well. Abby Joseph Cohen, Elarian, Boone Pickens, the late great Boone Pickens. Those are worth something now, Abby. I give it to you for a souvenir.
Interesting company to be part of, and I've been delighted to be part of your team over these many years.
As are we. We good? Over 46,000. We're going to 56,000.
At some point, as you know,
never say direction and duration.
That's exactly so.
Mm-hmm.
As you know, I'm a long-term bull on the United States. I think that our economy is by far the most impressive in the world, but there are always things to watch out for. And I loved watching the interview that you did yesterday with Lloyd Blankfein, because I have memories of sitting in a room with Lloyd and we'd all...
Is there a dude sleeping on the sidewalk behind her out the window? Is that just me?
I'll go in and everybody sort of knew what the consensus was and broad expectations in the market. But our conversation in that room was always, what are we missing? what could go wrong. And so if you think of a bell curve, the market tends to trade in the center of that bell curve, but the real opportunities and the real risks are at the extreme ends of that bell curve. And one of the things I'm looking at, quite frankly, because I like to be prepared for risks, is what's happening with the United States vis-a-vis China. This is a long-term concern. I'm worried, for example, about the way we seem not to be investing as much as we used to in science and technology, and also education. And the Chinese are doing a blockbuster job in their own economy, investing in these categories. So is this something that investors need to worry about this week? No, but it's something to keep on the radar.
Just wonder, we invest so much in education. Is it the amount of money, or is it, if you keep doing the same thing that's not working over and over again, you got to change the thing you're doing.
Apparently the money is not being well spent, because the pipeline that we have in the United States, K through 12, in math and science and so on, just isn't doing it for us. And we find that our PhD programs are very heavily filled by non-Americans. Now, this has been going on for quite a long time. We extend student visas to people, and fortunately, in the past, many of these people have stayed in the United States. 62 or 63% of the working PhDs in the US in medicine and engineering and applied science are in fact immigrants, not children of immigrants, but immigrants. And it's part of the secret sauce. The US has always benefited from immigration flows, going back obviously to the founding of the nation. And if we mess that up, and at the same time we are not enhancing domestic education, that is not a recipe for success.
People have been very concerned about the tariffs. I think Joe was mentioning you were one of them the last time you were on. That threat has not played out the way most people expected, certainly not the way the market was reacting back in April.
Right. Absolutely true. I was one of those who was extremely concerned about tariffs. And as I always do, I go back and say, have I missed something? And one of the things that we need to keep in mind is that the tariffs have not yet been fully implemented. We haven't yet seen the impact. Now, I hope that we, in fact, have what the consensus is saying, which is, basically a one-time increase in price level, but not in inflation. But we don't know that yet. And one of the things to keep in mind is that those one-time increases in tariff costs will be rolling. We've only seen part of it thus far. We'll see more in the second half of the year. And as all those inventories that got built up in anticipation of the tariffs get run down, we may see some cost increases as well as the supply chain disruptions. But if it turns out that I was unnecessarily pessimistic, I will be among the first to say, it's okay.
Gary Cohn just explained it away by saying the companies have kind of been eating it themselves, the companies and the producers of all of these goods, because they're just not hiring as many people. They're letting people go through attrition and through layoffs, and they've gotten much more efficient at doing it themselves, which is great until you look at the jobs market.
It's great until you look at the jobs market. Also keep in mind that in the second half of the year, we may in fact see profit margin erosion because of the tariffs. And I am worried about the job market. I think Gary laid it out quite well. As an economist, I would also say that the arithmetic has been confusing a lot of people. If the labor force, the size of the labor force is no longer growing, that's the denominator of the unemployment rate, which means that U2 that we look at, that unemployment rate, unemployed divided by the people in the labor force, if that hasn't changed very much, let's look at the denominator.
Everything you've laid out makes me think you think stocks are overpriced here. Is that the right takeaway from your thoughts on this, or no?
I think that stocks in general are fully priced, particularly the market cap weighted indices. And one of the things that I always look at is the following. You can be optimistic about the fundamentals or pessimistic about the fundamentals, but as an investor, you have to ask the question, what is already priced in? And I think that for some sectors of the US market, the good news is already priced in. There's some sectors where it's not fully priced, but clearly at these levels, which we are all enjoying in the market, there's less margin for error if things don't go quite as well as the consensus expects. So for example, Joe, if inflation numbers do start to tick up, or if the labor data becomes less comfortable than it is right now, that could be a problem.
Where is the greater likelihood of trouble? I thought for a while that it was growth in labor, not inflation.
I would agree with you, Joe. I think right now the bigger concern is that things have slowed down. We see it in the jobs numbers, we see it in the consumption data as well. And the other place we see it that many people are not talking about is business investment. We basically see that investment in equipment, investment in other categories related to AI have slowed. Now, they've slowed from torrid levels, so you couldn't expect those rates of growth to continue, but there has in fact been a slowdown. And in the second half of the year, we may see GDP numbers that are closer to 1.5% rather than 3%.
The market's current, everybody always says it's a sugar high, depending on their own point of view, but the sugar high could be rate cuts are coming, and that's why we're up here.
That's why we're up
even though
here.
Growth is slow.
Okay, but if it's already priced in, then the question becomes, will those rate cuts be effective? And we don't know that yet.
I respect people who are taking a cautious approach to the economy in regards to tariffs potentially increasing inflation sometime later this year. But we're getting to a point now where they've been saying for about 4 months that the second half of the year we'll see the results of the inflation from the tariffs. Well, we're halfway through the second half of the year, and inflation from PPI anyway reflected that inflation is down, and CPI came in as expected. So I'm still waiting for this big boom that they keep talking about. It's okay to be over cautious when it comes to your finances, but I don't know. I'm starting to feel like I don't think we're going to see that big uptick from tariffs in regards to inflation, in my opinion. So, Jay Money, what's up, buddy? Bulbasaur in the house. Can't watch now. Just showing my support. I appreciate you, my dude. I appreciate you. All right, guys. I will be back at 8 p.m. Central tonight for the evening live stream. I'm jumping over to the Patreon right now to do our group coaching call that we have scheduled. Guys, we have been crushing it in our trading group. I'm telling you, right now, you're missing out. We have partnered with BTCC, and we are crushing it with our Copy Pro trading, with our trading courses, and with our swing trades and all that stuff, guys. We've been making a fortune. So check it out today. Join our trading group if you want to get in on trading and you want to make that extra capital. I am also dropping two microcap gems over on the Patreon today, so you're not going to want to miss out on those. And it is Open Mic Friday night, hosted by our one and only crypto mom, Ramona. Check all that out and more, guys, for less than the price of a cup of coffee. The link is in the description. It's in the chat. It's in the pinned comments. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.